The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, except of course when it's Thanksgiving and the day off afterwards. Hope you had a great Thanksgiving, and let's get to the market. Dow is up 277 at 24,562. On Friday, it was down at the 24,268 area, and so this is a pretty significant rally. Is it the rally? So I had a great question here. With 3 new long trades in my opening calls from our subscribers today versus waiting to short, are you sending a message to subscribers this might be the low? So, you know, I don't think we are. My longer term aspect says that there's a really good chance that because of the selling pressure that I've seen since the October highs in most of the indices, some made it earlier than that, but let's just say the October highs, that there, especially with the FANG stocks, FAANG, that there should be a test. After all, there was a test in April of the February 23,300 low, and there was a fractional new low in the Dow, only the Dow, and went to 23,344. And I'm saying to myself, with all the selling that's gone on, we can't just be using up time, a rotation in time. But if you do look at this pattern right here from the high of 26,616 in the weekly chart, January the 26th, a minus 12% decline comes down to 23,360, rallies sharply to 25,800. And then what does it do? It comes back in 1, 2, 3, 4, 5, in 6 weekly bars, makes a higher low, rallies quite sharply, and then goes down to 23,344. So that's 7, 8, in 8 bars, in 8 weekly bars, it comes down to that low. Here we've only had, from the high that was made at 26,951 the week of October the 12th, actually the 2nd is the high, the 3rd is the high, comes down to 24,122, not as sharp a pullback. Well, wait a minute. Did I actually add these up? No, I don't think I did. Maybe I did, but I don't remember what they were. So there's a 3,000. 2333, 23, yeah, a 3,300 point decline. And this one was a, 24, 2,800 decline, 23, so 33 and 28. So that says to me, and then there was a rally, just like there was before, in 2 weeks, boom, goes to a new recovery high, screams up to the 26,277 level, comes back down. Remember, makes that Chapman wave Roman candle, comes down, goes below it, and then last week makes another low, but it's higher than the 24,122 low. I'm suspecting this is a process, and this uptrend line at some point will give way, and then we'll see if we get into the 23,900, 800 level. Are we going to see a retest of the 23,300? I would expect after this kind of selling, when the belated move down from the FANG stocks is only just now really, this is, some of them have had a 20% or more decline, but I'm expecting that there will be some kind of a test of the 23,000s. All right, now let's get to the nitty gritties on a short-term basis. So the question was, hey, how come you got 3 new longs? Are you saying that we've actually, no. If you look very carefully, and if you read very carefully what I said over the weekend, I said there's a very oversold condition. On Friday, although there was there was trading, but we were not on air. I did make my newsletter available. my opening call newsletter, I did say over the weekend that we were very oversold, that I had a Chapman wave trend gauge high reading on Friday, and that suggests that within 2 sessions there should be a 9 to 11 point E-mini rally. Well, that E-mini rally is actually up 37 points at this particular time. So yes, that's worked very well. I think this is a counter trend rally and that we should rally further. I think this time there's a chance that we actually have some legs instead of these one-day smashes, rockets to the upside and then smashes to the downside. I think this is going to last a little longer. I think we'll get into the gap area, 24,700, 800 area. Then I'm going to make some decisions. But the choices that I made, if you notice, I chose a sector, an index that we've very seldom been long for quite a while now. And most importantly, it's extremely oversold. So even just a decent bounce could give a very nice percentage gain. And we've got a leveraged ETF, so that's good. And also it's rallied enough that there's a chance we're going to be able to raise our stop. So that's good. And the other thing is, yep, we've got a long on the Dow, and that's doing very nicely here. And I think that we might be switching very soon to the short side, but I'm just staying in this position. And we have a stock that we've had very big success with previously. I wanted that again, and it's doing very nicely for us today. So it was very selective, as I said, but I'm not sure that this is the question is this a low or the low? And I suspect it's only another A low, another one of those earthquake. Now we're having the aftershocks. There's a lot of work to be done to be able to regain the strength, the veracity for a bigger move to the upside. I think that comes later on, maybe January. I'm not sure yet. We'll see how November plays out, and then the early part of December. I will be having a workshop to coincide with all these things that I'm looking at. So now the Dow up nearly 300 points. This is very nice action. It's not great. I really want to see 24,650s, and I wanted by tomorrow. Well, of course, what we want and what we get are two separate things. It must hold 24,420 to 24,380 support, regardless of what happens. Brexit, I don't care. That's what has to happen. All right, let's go to the S&P. Now we'll run through these quickly. S&P is up 31 at 2664, up 1.2%. Dow's up 1.18%. This is a nice move. This has started gray leg A, and 2681 is really the target, as I said to subscribers, somewhere in the 2681 area. If everything works out here, stochastic has turned up from 8%. It's not great. It's really pathetic, but it is turning up, and the MACD histogram is a little bit better. This is a counter trend rally as far as I'm concerned. QQQ, here we go. QQQ is up 1.58%, up 252 at 161.73 in a leg B to the upside, a little bit more advanced in the lettering in the Chapman wave, a gray leg B. It'll be blue for the moment because I haven't time to change it. Just make it sure that at 160.73, about that level, a point lower is key support, but underneath 160.20, that'll not be very good. And the IWM, as we get out of this, we're going to go to our first break. IWM is up 168 at 149.57. It's really lagging. I'd say the 150.60 is a lot of resistance area, and it better hold 148.75. I'll be right back. Basil Chapman, Tiger Technicians out. Dow's up 286.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Folks, we're back. So, yeah, I had a question about the advanced decline line. I keep meaning to check. I believe this is the Investors Business Daily. This is the NASDAQ advanced decline line. Look how it's been declining. Had a really nice rally, short-term rally right there over the last 4 sessions. The major trend, though, so far is still down. I'm just wondering, can I get the Dow? I've not done that before. Let's see, Dow is a guess. One moment, retrieving data. Oh, yeah, okay, good. So here's the Dow. So this is very interesting. Look, in the Dow, this is from Investors Business Daily. I hope there's no copyright involved. I'm mentioning that it is Investors Business Daily, so that way we don't have a problem. Yeah, look, here's the advanced decline line. It was running sharply into October, and then it stalled just a little bit as the market came down down really sharply from the 26,600s high. And then what happened was that 6,951. Yeah, I think that was the high. And then what happened is just on that rebound, you got that pullback, and that pullback has seen the advanced decline quite a bit. So I'll be watching it, but yeah, so the answer is the advanced decline. I look at the advanced decline. I studied it closely, going all the way back to the 1920s. The advanced decline back in 1928 started to come down. So if you use it for timing, I find it extremely difficult to use an advanced decline line for timing. I use many other things, just as we got the exact top of the Dow the day after the October the 4th high, third high, we went October the 4th, we started a short position, which we held all the way through down to the 25,000s. So I'm looking at this and I'm saying, use other tools for the timing, but overall, we'll see if the advanced decline line in the Dow, unlike the NASDAQ, which has been quite weak for a while, if the Dow starts to continue lower. Okay, now let's get to a couple of other things that we're looking at. IWM has this, it's like an inverted V. I draw this in as an arch because it's just a little easier to visually see through an inverted V. Hasn't taken out the 145.52, I believe it was, low of the 29th. I think these will at some point. I don't see any reason why they shouldn't. There's a lot of, we've had 10-year major bull market with a couple of corrections, but nothing very serious. I think this has the potential to be a little bit more selective in the seriousness, while some of the stocks are just now starting to find some pretty good support. All right, enough with that. Let's just go on to the gold. Gold right now is down. Well, it was down. Now it's just down half a point at 122.7. It's just kind of stuck in this range right here, sitting on the 9 and 14 period moving average in the daily. I could draw in a second arch. I'll do it now. It's a little premature because it needs to slip below 12.18, but this has the potential for an arch rather than a V-shaped pattern, and it's just sideways trading band. It's just, if you've got an individual gold stock that's doing well, great. That's the way you got to look at it. But the actual gold contract is not giving you many clues other than to say, I'm stuck. I'm stuck between 12.44 and, say, at least in the shorter term, 12.12. All right, that's how it is for now. Silver, same thing. As I said at the beginning of the week, we'll be very thorough here. Silver's actually much weaker, down 0.018 at 14.22. I've just said it so many times. In the 1520s, silver really starts to take on a life of its own. Hasn't got there. So that's a big thing. It's another point higher. And that's going to be very important. Let's go to high-grade copper. Now, high-grade copper, I did this for my subscribers to my opening call, very detailed report over the weekend. And I did say that wood, the iShares Global Timber and Forestry ETF, has made a lower low. The HGX, I usually show the two together, housing index, has had a bit of a bounce and is kind of holding okay off the lows. Wood has not, and that goes together with copper. And I'm trying to put the two together overall to say, using the world economies right now, copper is not finding buyers. That's not a good thing. And wood, which is the iShares of the global timber and forestry ETF, I wonder where it's today. It must have bounced, surely. Yeah, it's bouncing a tad. Look at the tiny little thing there. 63.80 is up 19 cents. Gone to a leg E in the weekly chart. Oh, man, this is just not good at all. That monthly chart is just horrendous. This is just saying there is in many areas. I've called this a selective series of selective recessions we've seen in various industries here in the United States and around the world. And I would not be surprised if the building industry around the world is starting to see slowdowns in many countries. And I think that's what we're looking at in wood, the timber and forestry ETF. Let's go to crude oil. We're going to go to the currencies in a minute. Crude oil, woohoo, up $1.26 at 51.69. Made a lower low. No, yesterday, on Friday it did. And last night, I thought it did. Today's low is 50.10. And over the 50.15, yeah, it made a lower low today, and it's just a little green candle. I don't see much going on in crude oil. I can see a bounce. I absolutely certainly can. But 54 to 56 is really strong resistance. And then I think it comes back and does a retest. So we've done that. All right, here we go. Dollar. The dollar was up earlier, it's up 5 cents at 97. So I discussed, spent a lot of time on this Chapman wave alternate count, making this a potential D, but I said only if it closes under 95.77. And we're at 97 right now. So this means we've got the alternate count of C, and there should be a D to come. And that means a D to come would mean that it goes above 97.69. Ooh, that'll be really impressive action, especially for the weekly chart. Love the dollar, long the dollar, still love the dollar. EUR-USD, euro-dollar currency pair. We're looking at 1.134 up 0.5. I hate these zeros. 1.1344 is not good. It's got the arch formation. It says it better hold 1.13 because otherwise there's real problem. Try to rally to 1.41, save the day. I don't know if it's going to do that. USD-JPY. Now we're looking at something very interesting because that is rallying. It failed to make that leg D before, but the weekly chart still says rectangle formation, stuck in this formation between about 112s to 114s. It needs to break above to get to the 114.58 level, the recovery high back on in mid-October. All right, now what we need to do is to look at it. TLT. So I said to subscribers, some opening call, that yes, you've made a leg D in the TLT. Now, I said that this morning to subscribers. But over the weekend, I showed the 10-year chart, and I said 10-year yield. And I said this 10-year yield looks to me like it's kind of stuck, and it's kind of trading in a range. And that range says it's at 30.72, 31.10. It's kind of the upside limit I'm seeing, and 30.33-ish is the area of support, but it's just stuck in the range right now. But it has pulled back quite nicely from the 32.48 high. I'll be back, and we'll go to all the questions that are pouring in. Basil Chapman, Dow's up 242, S&P's up 26.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi everyone, Basil Chapman, Tiger Technicians Hour. Dow's up 242, S&P's up 2650. I'm chuckling because for about the last 3 months, I'm starting to receive emails, price reduced, condo. So this is very interesting. I spent a lot of time over the weekend speaking to a real estate agent who works for one of the biggest companies here, who really knows what's going on. And I think there's a little problem right there in the wings in terms of real estate here in the Northeast. I can only talk about the Northeast. I don't know what's going on in the other country, other states, but I think here in the Northeast, other than the fact that Amazon is coming in to Queens, that changes the whole landscape. Instead of starting to come down, some of those areas will see their prices buoyed and even going up, but that's really unusual. 10,000 new jobs, I don't know how many of those will want apartments, but even if it's just a small percentage, that's a lot of demand. That makes a difference. Okay, so question about the TYX. They made a peak F-top, the 30-year T-bond yield at 34.55 on the 2nd of November, and it came all the way down to the 32.78 area. I think it's in a trade between 32.63-ish and maybe and 33.47-ish, somewhere around there this week. I don't think it's going to go anywhere too quickly. In other words, I don't think it really starts to sharply move higher. And I suspect that the Fed is not stupid. They're going to talk about the reality of data. They're going to say, we're following the data, but as soon as we see a change, we're going to make a change accordingly. I don't know what else can they say. All right, so that's that. Now we're going to go to the other questions. Boeing. All right, let's start off with our Boeing look. Boeing, of course, is one of the biggies on the Dow. It's down 47 cents at 311.93. Could be impacting the Dow negatively because some of the Dow stocks up real nicely. At 311, I still believe, yeah, that was a Chapman wave Roman candle. No, that wasn't a Roman candle. Let me get rid of that because it had the potential and then it changed. So that is, I cannot use what's not there. No Roman candle. Let's see. Okay, but the weekly chart and the monthly charts are really very negative. Let's go to, yeah, so Boeing must hold 296 in the next week and a half because if it goes under that, that's going to be a big drag on the whole sector, PPA. But at the same time, I see a lot of resistance to the 320 to 334 area if there is a rally. And if it does rally, it'll help the market, help the Dow. Next question I had is JP Morgan. Now, this is really interesting. Look, JP Morgan, same sort of chart as Goldman Sachs, holding okay, not showing a real nice session today, up 264 at 109.29, up 2.48%, but just kind of stuck in a range, and I think it's going to remain stuck in a range. In fact, let me just draw this for the moment. I'm drawing a rectangle formation, even though it's more like an oval, but a rectangle formation, that just gives you the borders. And it just says 106 is key support to hold. I'm going to say 105.50. And the upside, a takeout of 111.10 would be positive, and it could even go to a leg D above 112.93. I think that's going to be a little difficult. Now, right midday is where I expected there'd be some kind of selling pressure. I've discussed this in terms of what to look for at 1:30 today in the market. I'm looking at this and I'm saying, you know what? Let me go back to my E-mini right here. E-mini went to a peak D on the 2-minute chart. I was showing this to the Dan a short while ago. As we were coming on, I was doing the notation. In fact, this turned into a buy mode because it went all the way to a D. Now it's in a sell mode in the 2-minute chart, taking out the left side low. Now, the reason why I said that we want to be raising stops on all the positions we took today is because we are just too used to selling pressure coming in. So the Dow is still up 216 points. It did go all the way to up 300 and something, 300. Oh man, what was the high? The Dow high today was, I want to get there because we want to do apples to apples. So the Dow high today was 24,673. 673, it's almost 200 points off that right now. MACD's weak. Stochastic is attempting to turn. Now it's at 5.78%. Before it was at 7%. I think that if the Dow by a little later on, now, of course, I'd say to subscribers, we've got to be ready because if the Brexit starts to fail, it still has to be passed by Parliament, I believe. Parliament? It has to be passed. If the Brexit starts to fail, my suspicion is the market will pull back. But if the Dow actually holds the 24,450s, 24,430 area, and by later in the day or early tomorrow actually manages to rally, not back to where we were, it'll be great. I don't think that's going to be possible, but actually rallies to go way off the lows that are being made at right as we're speaking now, That's where I will. That's the reason why I wanted to be long, because I do not want to buy big gaps like we did. Even though I said to buy it under a certain level, it was still a big gap. I don't like that. Friday would have been perfect to buy at the close. Of course, we didn't. Sunday night, when I sent out my email, my weekend report for Monday, I was going to say, let's put in a bid to buy, and I would have said what it was. Most people wouldn't be able to. Then then it's confusing. I got some people in and some people out, and I just wanted everyone in the same on the same program. So as it stands right now, the Dow is at 24,475, up 189. It's a tad lower than our entry point. I expected something like that, but it did rally enough for us to be able to raise stops in some areas. Now comes the big issue. Is this another failure pattern? Because I mentioned before, this lowercase h should have tested the left side low of 24,122, but the stochastic was low enough to say, hey, we could now have the lowercase h go to a lowercase m. Doesn't have to go anywhere close up into the 26,000 level, but it could certainly go to the 25,000 level of the 200 period moving average, because we are so oversold. And that's really what I'm looking at. Where will I switch back to the short side? Now it's going to be tougher, but I'm going to try to do that. Basil, do you know anyone that works for GE? I did know quite a few people that work for GE. It's a sad situation. Many of them, we were in discussions over the years, and many of them were lightening up in the GE positions. But it's very sad. Some people could not get out of everything. They still got some, and they had a major engine plant up in Lynn, up in the North Shore. I knew people there. It's just sad that a company that was once a great company just has failed so miserably. Maybe it'll be back, but it's not nice. So, okay. Next question is, so JP Morgan, Goldman Sachs. So while we're looking at the Dow, as I said, this is the very area that either we're going to fail miserably and come down very sharply and close the day as if nothing had happened. But if it starts to rally, there could be a counter-trend rally that'll bring in new buyers. And then we've got to see, is it going to be a retest of the 24,122 Dow level? I think at some point there is going to be a test. I'll be right back. Wow, time is flying. Goldman Sachs, let's just do the best going out. Goldman Sachs.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi, folks. So I have a question about Dow DuPont Inc., merged company, trading at 57.22 up 79 cents. I don't see anything yet for this company. Wow. Let me see. Leg C in the weekly chart, trough C, leg B. Not yet. I do think that Dow DuPont later on, probably about February maybe of next year, could be starting to do some real nice work to the upside. I just think it needs more time. It's had a spectacular run from the 40 level all the way to the 70, 75, 76 area. Had the one-to-one extension to the downside. Not yet, Dow DuPont, not yet. A question about CVX. CVX is trading as a Chevron Corporation. Yeah, here's another one. This is tough for me because in terms of yield stocks, we had a stock that I looked at that was doing very nicely. And then all of a sudden I read that it was going to take over or buy out someone. And I just don't like that. That's a lot of pressure. So we're out of that now. And that would have been a yield stock. It would have been very nice if it just kept on doing nothing but what it was doing before. So we're kind of out. CVX, I'm having a tough time saying that CVX is a dividend-paying stock that we want because I always look at it as capital gain and dividend. I don't see capital gain. I see a chance. Maybe in 3 months' time it's back yet 114, but there's a chance it's going to test the 112 200-period moving average in the weekly and go under it at some point. I don't see that. In Exxon, the same thing. I would venture to say that in terms of the two stocks, CVX seems to have a better chart formation, I think, than the ExxonMobil. ExxonMobil is 76.44. It looks to me like at some point it's going to test the 71 200-period moving average of the weekly. It could be wrong, but I don't want to have capital loss and dividends. Wonderful, you're getting your 4.5% dividend, which you have to pay tax on, and then you've lost 12% of your capital. I'm not interested. I want a 3-4% gain in capital plus the dividend at least. So that's that. And the same thing with the Verizons. Verizon's had a spectacular move, and even now it's acting so well. It's up 51 cents. It did go to, I'm calling it for now an F in the daily and an E in the weekly. It's only a C. I believe that I have to call it a C in the monthly. This might be one. So if this pulls back sharper, but my contention is that this whole area, I know the way I'm looking at it as if to say, I'm going to be moving out of some of my Verizon equipment and go to more to Comcast, and I'm going to get rid of some of the Comcast as well. I'm trying to consolidate. Meantime, I'm paying a bundle for every month because I need backup. I have a $68 a month just a card that allows me to go anywhere and I can plug it in, because I need that sometimes. Or if something goes wrong, I can quickly flip to the my desktop here and move it over to the thing. But that's different. I need to consolidate. I think a lot of people are starting to consolidate, and you don't need all these different. You can choose the programs you want. So maybe I'm wrong. Maybe there's something else that's going on in Verizon. But it looks to me like Verizon, certainly if I had the given the buy way back in April in the 48 area, now in 59, you got a wonderful 10-point cushion. We don't have that now. So this is a tough one for dividends. So I'm just talking out loud here saying for subscribers, I know there are many subscribers that say, can we add dividend stocks, and sometimes do, sometimes I don't. But I just have to say that this is tough, because I think Verizon and Comcast and all of these internet producing and communications areas are going to be under tremendous pressure from the public, just trying to cut back on their bills. The bills are really big. Okay. Question is, I did that. Oh, here was a question that I wanted to get to. Nike. So Nike trading right now at 72.43. Remember, I said that everything I'm looking at suggests that Nike in the monthly chart is about to, based on the weekly chart, if this is a peak G at 86.04, the week of the 27th of September, it's both either a peak G or it's a C1, C2. And either way, it was a pretty serious top, and we went down below 70, now to 72.48. And what I said, I think Nikkei Sports and Sportswear, Nikkei B shares, trading 72.46, up 97 cents. I think this is a peak E hat trick top, meaning that I don't think that it's going to go back to the high of 86 for a long time, maybe many months, maybe many months. Especially the way it broke down in the H pattern and went to a lower low on early last week. So I don't like what I'm seeing. I think that Nikkei is, certainly for me, is out. This is a down arrow right here. And I'm pretty sure by Tuesday, Monday's close will make Tuesday a down arrow for Nikkei in the monthly. But I got to think it through carefully, because normally I would not put a down arrow until the MACD crossed negative and the stochastic went under 85%. So I'm not going to do anything until I get some kind of confirmation, but everything about the look of the daily and weekly suggested that monthly is at least in a sell signal as we speak, and that should go to a sell mode sometime in December, maybe January, when the MACD crosses negative. So I'd be looking at this askance. I see maybe short-term trades, but this is a longer down. It's in a downtrend in the monthly, in the weekly, and the monthly is about to go to a sell signal starting that particular phase. Next question I had is, question I keep getting, and I keep saying, oh man, I haven't played this very well at all. Disney. So Disney had this, wow, this is a yo-yo. Look at this pattern. It makes a low. Let me show you the daily and you'll see it. It makes a low. First of all, it makes 117.90 high on the 7th of September. Then it has a whole series of lows and goes all the way down to 108.23. So not a big deal, 19 points. So it's about, let's call it 12.5%, 13%. Then it has a whopper of a rally and goes right back to the 117.90 area. It goes to 118.10. And I said, maybe I'll call this a G, but the technicals look pretty good. But then pulls back very sharply down to the 111s, screams up to the 119s, 190.69, October the 22nd, plummets down again to the 111s, and then screams in an A, B, and goes to a leg C, and then a peak D at an all-time high on the week of the 9th of November at 120.20. Now it's back down. This back down has the worst technicals. I think Disney's in trouble. And I think that Disney's one that could, in fact, over the winter time, before it gets to the spring and summer, where they have their best seasons, I guess, this could be a peak G. in the weekly chart, and that says leg D. Now look at this monthly. I've held it back. Now I'm going to show you. Look at this monthly. Look at this high-level consolidation. Remember Walmart? Way back when Walmart, let me see if I can do this, WMT, and then squeeze, so you can see what I'm talking about. Yeah, way back, 80, look at this. I'll talk about it when we get back. And those highs back at 62.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Folks, gee, you got wonderful technicians you've got. Steve coming up after me. You've got Dave coming up, and then you got Tom O'Brien. So, Walmart, December of 1999, 70.25, peak D high. Pulls back, and then it holds the 41 area, and it stays between around about 62.5 and 41 for 12 years. Then it breaks out, makes a Chapman wave stalk leg formation. There's that oval body, 81.37, rallies to 19.97 PG on January of 2015. What does it do? Goes right back to the 200-period exponential moving average area and holds in the rectangle formation for the last time, goes back into it goes to about 60, I'll give you the exact figure, goes to 56.30, I'm sorry, 56.30, then rallies up to a peak E in the monthly chart, right there, that was the last high of 109.98, makes a U-turn, tries to rally, and now it's got fading technicals on the right side, and this says that the XRT and the retail sector, you got to watch this retail sector really closely because things are not So great. Okay, question I had about the XLI. XLI is trading right now. This is S&P Select Industrials. Nothing great here. This is just an arch formation that's not holding very well. That's different to the Dow, different pattern, but it did hold better on the way down, but it's not doing too well today. It's only up 0.07%. So be careful with the industrials are not ready yet. Apple, a real quick question about Apple. What was the question? Apple is minus 1%. Oh, it's down 1.22. Apple is making the arch formation. I would not be surprised if Apple at some point goes into the low of 160.63, April's low. It's at 171.10. Something's not right in Apple. Apple is rotten to the core. Now, Apple is not looking too good. So, yeah, it could bounce at any point, but not yet. Next question. Okay, that's it. Apple, XLI. Up, I got all the questions. Good. Hey, folks, have a great day. Stay tuned for Steve Rhodes, and stay tuned for David. Stay tuned for Tom. Check out my opening calls, my daily newsletter, very comprehensive and hopefully profitable for you. And I'll be back tomorrow. Have a great day.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading News.